Futures trading involves substantial risk of loss and may not be suitable for all investors.
Well, from about any angle you can think of, lots of tension going on around the globe right now.
There is, yeah, the headlines have really picked up over the last 24, 36 hours. Starting this conversation with you here today, we talked about the Russian drones into Poland. There's some attacks in the Middle East. Israel attacked Hamas. So a lot going on. On top of that, I think Ukraine bombed 3 more Russian oil pipelines. So there's a lot of risk out there. And so when we're looking at geopolitical risk, we're going to look to the precious metals market, obviously, but you and I have covered that enough that it would probably sound like a broken record. So we'll zoom in on the crude oil market here, and you can see that we're starting to get a little bit of a bid off of this support level that has really been intact for quite some time. And today we're rallying to the upside. You see a little bit of overhead resistance at the 50-day moving average and trend line resistance that comes in near 64.5, 65 for this October crude oil contract. And moving into the weekend with all this geopolitical tension and risk, I wouldn't be surprised to see the market continue to grind higher into that. And if we're able to get out above resistance, I think that's when you start to see this market maybe accelerate to the upside. Looking at the fund positioning, funds have their smallest net long position in crude oil since about 2006. So there is not a lot of risk premium in this market right now. If we continue to see these headlines pop up globally and we get a technical confirmation of buying, I think this market could have some room to run.